Services. So we had some data from UK Finance last week showing that lenders have helped over 1.2 million businesses through the three major schemes. Over 13 billion has been lent to 58,000 firms through CBILS, and 480 large businesses have been supported through CLIBILS. So some major support there from UK banks, not just Santander, but many of our peers who cover this sector on this call as well. The bounce back scheme, the smallest scheme for the lifeblood of our economy, the SMEs, has been by far the most popular. Very quick for banks to process, straight into to companies' accounts within 1 week, 2 weeks. And that's where Santander have probably supported the most, approving over 3.4 billion via BBLS, more than double our 4.5% SME market share. And again, we're not alone there. All of the banks have contributed to that. So what are professional services, and how have professional services fared within this sector? And this is where I perhaps have some notes of optimism. For professional services, I mean, each business will be different. No doubt there'll be many leaders on this call covering consultancy, architecture, advertising, and other core sectors that have had far greater challenges than those seen within legal and accountancy sectors. I do feel sorry for some of my colleagues who cover the training businesses, who I must admit have been far busier than I have, and that's where I have notes of optimism. The amount of applications we've had through the government schemes within the professional services sector has been very low, and surprisingly low. And I'll come on to that, and perhaps the adaptability of professional services firms versus other companies. So very few requests, and where we have lent into the sector, it's been what we would term a BAU, a business as usual request. Firms looking for additional liquidity, contingency funding, but certainly not emergency funding, certainly not that emergency government funding that those schemes were really set up for. And what that's enabled professional services to do is to actually take on far cheaper funding, funding on far more competitive terms than the government schemes, where margins are often north of 3-4%, depending on the funding that business is looking for. So that's been a positive. And I think one of the other things to touch on is those government schemes placed great restrictions on dividends and in turn distributions, which has been a further challenge to professional services firms, and therefore that ability for banks to look at profs on a BAU basis has been very important. So some signs of optimism from me, and the sector as a whole remains one banks are very keen to lend to. Our internal credit ratings for professional services firms are typically very strong. The default rate within the sector is very low. Our non-performing loan book within professional services again is very low. So we remain optimistic. Headwinds to come, as I think John said at the start of next year. But professional services firms have been there before. Despite wiping out years of growth, the global financial crisis saw professional services firms come through relatively unscathed. And I think we'll see it again. There will be disruption in the market, as John said, which may well present consolidation opportunities, the consolidation that we perhaps in the legal sector in particular have still not seen, but some room for optimism. And I think one note of caution on those government schemes, and this is a bit of an unknown at the moment. So one for the finance directors and managing partners on the call is the likelihood that we're hearing at the moment is that those schemes will come to an end at the end of September. That hasn't been confirmed, but I suppose the word of warning would be, if you do need support, if you do need to speak to your finance teams to see how the firm is tracking at the moment, then please speak with your banking partners. There should be a key advisor to your firm. COVID has given bankers an opportunity to actually be heard and heard positively, which has been quite welcome. But make sure you're prepared, and forecasting is key. All too often, professional services firms, the forecasting we see as bankers is fairly weak. It forecasts, a year on year of flat growth at most as a stress case. And speak to your financial advisors, other financial advisors, accountancy, legal firms, etc. For those smaller firms who need that help in preparing those forecasts. What else have we seen? Well, cash is king for all banks, as you well know, and for us, it's what we fixate on, and in particular lockup. And COVID, rather crudely, I suppose, for us bankers, has actually seen firms firms accelerate that focus on lockup cash, and we've seen vast improvements. A lot of our largest firms actually sitting on significant levels of cash. Collections have vastly improved. Holdbacks on distributions and indeed drawings on a monthly basis have seen firms sitting on surpluses, and so that, firms, professional services firms, far greater than your trading companies, have that ability through the LLP model, or even the standard corporate model, to turn off those key outflows, people, costs, very, very quickly. And so that's been very welcome, and we've seen that in some of the strong forecasts that we have seen come through. And so to Richard's point on one fine-tuning their business and the model set out by racing cars and those companies in particular, that time spent focusing on cash throughout this crisis, I think, has been invaluable for firms. And I think we really hope that will continue post-COVID and will become a BAU practice. So we'll see how that works. So whilst I start the talk with much optimism, I will end on some notes of caution. And this isn't particular on financing, but it's the financial health of the company. Fraudsters continue to see professional services as a target sector. Whilst most firms have adapted well to new business practices, change brings opportunity for fraudsters. Working at home brings new challenges, with firms having to adapt to the way they make and receive payments, process invoices, and deal with both clients and suppliers. So please, if you need to, speak to your respective banks on how to adapt to that as well. So